Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, just having a quick look at the news. Dollar sinks versus the yen hovers near 2.5-year low to sterling after Fed's dovish shift. Now, Jerome Powell came out Friday after the Jackson Hole Symposium and gave us a little rundown of, you know what, too much pressure on employment, interest rates are going to come down, inflation's, we're sort of done with it, all this sort of stuff, right? So nice little junket for the crew, but really there's a lot of meaning coming out of that, and it really sets us up for a clear path to lower rates in the US without any, sort of question marks over it. If anything, the question mark is it going to be 25 basis points or 50 basis points? Now, this is the path to the rate cut, right? And you've got Jerome Powell speaking at Jackson's Hole. Now, this week we got a couple of key numbers. The GDP numbers, not so important, but the PCE price index numbers on Friday, they will be. And then next week, right, the first week of the month, we get the non-farm payrolls. That'll really be the cruncher, whether there is a 50 basis point cut or not, right? To me, that's one of the key ones. Then we've got the CPI numbers, retail sales, right? So we've got a nice little run in here, PCE price index, payrolls, CPI, retail sales, and the FOMC. Is it 25 or 50? Now, for those traders, you know, who are new to the network or whatever it might be, I was talking last week, and I don't want to sort of beat my own drum all the time, but I was just trying to tell a couple of guys, like, you know what, we had that move down the dollar, and so using the dollar index or even euro, and then it started drifting sideways, and they're like, is that it? I'm like, absolutely not. This is like the normal flow of a trend. It goes down, drifts sideways, and then you get a little bit of fresh info and it starts to go again, right? So this trend in the dollar has been set up perfectly. There's been no rush, and that's why you've got to be confident with it, right? So all you're doing today, right, I wouldn't be sort of ripping into the market, although we do have some good numbers to start the week. It's one of those weeks, it's the last week of the month, but sometimes the data overlaps from one month to the other because it's like a 4 or 5 week sort of format for the release of a lot of data. This week, even though it's the last week of the month, we do have a lot of things coming out. But just having a look at the charts there, right? Nice trending markets. If anything, I'd be almost getting sterling if I just get this trend line here. Well, I'll have to fix that up. Just looking at a number of these instruments, they are like showing great signs, right? And the good thing is, the dollar, well, what Jerome Powell's done, he has sort of decoupled all the central banks. Like the focus isn't now just on the Fed. And that gives us an opportunity here, now I've finished drawing those trend lines, to really get onto something here on Euro, Sterling, Aussie, Kiwi, dollar CAD's cruising downside, and oil is starting to join the party. Makes me more confident to get short dollar CAD. Dollar yen is just doing its thing, as is dollar Swiss. These are great sort of trending markets now, right? You've got to be able to recognize the difference. And I know for a lot of traders, we haven't seen this for eons, but I'm telling you now, this is what we're seeing. So get your analysis done, look for some of the numbers, and we'll try and work out where the best trade is. Now, just getting up trading economics, just have a flick through the economic calendar for this week. Right now, IFO business numbers, you know, the IFO numbers have got sort of good historical respect, right? The German numbers there. So have a look at that. The durable goods, and this is what I was talking about. It's not every week that we have durable goods out on a Monday, right? It's like, wow, this is good. Let's rip into that. Then you sort of have a look through the rest of the week. Now, it's really hard, unless you get a lot of experience, to work out what's what here. Like the GDP growth rate out of Germany, the final numbers, usually very close to the mark. But you know what? If you're sitting in front of the screens, make sure you take a look. The S&P Case-Shiller home price numbers, definitely well respected in the market. You might want to keep an eye on that. Consumer confidence. We've got the Aussie on Wednesday. We've got the Aussie monthly indicator, right? The RBA has been dragging their feet. But one of the key things, and I'll come back to the interest rate probabilities in a minute, all the major Australian banks have already started cutting rates as of last weekend. You know what? They don't cut rates unless the central bank's cutting rates. So regardless of what the central bank is saying, they are going to be cutting rates very shortly. So we'll see how that plays out. We saw the Kiwi do a knee-jerk reaction downside on weaker rates, but then straight back higher on the weaker dollar. GFK consumer confidence numbers. Once again, Eurozone, check it out. These ANZ business confidence numbers, it's like a third tier number, but can have a top tier impact if we get some serious variance, right? So make sure if you're on the Australasia session, check that out. That is as loose as a goose. Coming into Thursday, now in that European session, let me just scroll down a bit. The German inflation numbers, the prelim numbers, right? They come in over the course of the day. It's a little bit hard to track, but you know what? They're pretty steady. Then we got the US GDP numbers, right? I just showed you that path to the Fed rate cuts. This is one of their first numbers. We also have the initial jobless claims. I would be thinking that's probably a little bit more important than the GDP just at this stage, right? I'll be keeping an eye on that. Pending home sales in the US, your retail sales figures in Australia on Friday, which is a little bit rare, usually like a Wednesday number. And then you come down to check out this number here. This is Friday. As I was saying, like the overlap of some months, we get a lot of extra data that comes out on a sort of 4.5, 5 week basis. And this is what we've got. It's like going to be active across all sessions, right? Not that I would be expecting anything from the Japanese numbers. Housing credit retail sales in Australia, definitely worth a look. Then you come into the German retail sales, employment numbers. You've got the inflation employment numbers out of the Eurozone, sort of following up from the German numbers. Mortgage approvals, consumer credit in the UK. Right? I know it sounds like I'm just sort of listing them, but these are all numbers that can sort of shift the market around. GDP numbers in Canada. I still don't think GDP is a big thing at the moment. More inflation and employment. Once they've cut rates, then GDP becomes the big one. But we'll keep an eye on that as we go forward. The PCE price index number with personal spending, etc., on Friday. Now, this number's been getting a lot of hype. It's been coming out as expected. So I don't expect anything different from it. All the numbers have been coming out weak in the US. We've already got the answer from the Fed. It's not like weaker numbers, we're going to see a move in the dollar, right? We saw that happen a couple of weeks ago on the CPI numbers. US CPI numbers came out weak. The whole market's short. And you know what? The dollar rallies and takes everyone out. So don't get overexcited about the PCE. It's more just a number that's coming out. The Fed, once again, 61% chance of 0.25. You think that's probably higher because it's 38% chance of a 0.5. So I'd say the quarter of a percent in the US is like a given, right? That's probably 95% as opposed to, what the breakdown is there. So just having a look, there's been no major shifts. I think the Reserve Bank of Australia, no change, 84.7%. As I said, the major savings banks in Australia have all cut rates this weekend. So the RBA is either dragging their feet or the derivatives market isn't up to speed yet with what is happening in the real market itself. Okay, so anyway, that's where we are, right? You just got to connect the dots. You look at the global markets themselves. Okay, so the NASDAQ, Friday had a really good day. Today, US equity futures sort of down, right? A little bit of a correction from Friday. And we do have a bit of a risk off day. Euro, sterling, Aussie, Kiwi down, but then we've got a lot of dollar pairs down. Okay, so a little bit of discombobulation there. If anything, to me, the US interest rate yields, treasury yields, slightly down. I would have thought that would have given us a slightly higher equity market. So just be aware as you come into trading Monday, and I'd rarely get involved Mondays, but there's a lot of things all going down. If one goes down, one should go up, right? There's a bit of discombobulation there across the board. The Aussie and Kiwi feeling the pinch more so today. If you look at commodities, gold down, like some of the metals are down, crude up. So it's a bit of, we've got different things happening. But what you should be doing is getting excited about the potential opportunities coming up, because when we do come back in and look at the charts on the hourlies, they look gorgeous, right? And you start to look on the majors, on the daily charts, obviously you can see very clearly where these trends are, and we're just going to work out a way to get into those trends because it's last thing you want to be doing is sitting there trying to work out, okay, I can see everything going down, but it's not just a matter of just opening your platform and just trading and getting short, right? You've got to wait for a key sort of momentum, sort of fundamental, or look for your timing, right? Using the stochastics, looking at for an opportunity where it's overbought and going up, and that's where you can sort of get into those trades as well. But I'll cover more of that as we go through the week. Probably going to find a lot more trade alerts coming out as we go through the week. Just with all the numbers, we've got clear trends, so it does become a bit of a no-brainer. If we get the economic numbers going with the current short-term trends, you're going to find nice, easy trades to sort of build capital in your account. All right, guys, that's it from me. Have a good trading week. Any questions, jump on the Discord and I'll be happy enough to answer your questions. All right, guys, have a good one. Cheerio.